sir. He is from Lucknow. I request our committee member CA Anisha Seth to give the brief introduction for the today's speaker. Anisha,
Thanks,
over to you.
Amish. Yeah. Am I audible?
Yes.
Yeah, you are audible.
Yes.
Thanks, Amish, for giving me this opportunity to introduce CA Ashok Sir. CA Ashok Seth is a fellow member of Institute of Chartered Accountants of India with a postgraduate qualification in Information Systems Audit. He had got 35th position in merit on all India basis in CA Inter exam, and he is in practice since 1975 in income tax and audit sides. He has been chairman of Lucknow branch of Institute of Chartered Accountants, member of managing committee, member of committee of information technology, member of regional information technology and web designing committee of Central India Council, member corporate law committee of the Institute of Chartered Accountants. Then he has been member committee of review of education and training for ICAI. He has been member of Kanpur study group on companies amendment bill, chairman of UP task force of professional development committee of the Institute of Chartered Accountants. Then he has been member of professional initiative group for the Uttar Pradesh of state of Uttar Pradesh for ICAI. He presented papers on subject of auditing, income tax, company law, and information technology in various workshops, seminars, and regional conferences. He gave lectures in Direct Taxes Regional Training Institute in Lucknow on different topics. He gave talk on personal taxation at an IIM Lucknow in MDP programs. He has presented paper on VAT concepts and its variants at a national seminar on value-added tax issues and implications on 20th April 2003, organized by the Commerce Department of Lucknow University. With this brief introduction of Ashok Sir, I will please tell him to start the program.
Ashok sir, over to you.
Okay, let me share my screen first. Thank you for my nice brief introduction. This is the advantage of the technology that I am addressing Andheri Oshiwara CPE studies from Lucknow. I could have never imagined that I will be addressing members from that far off place from India, but still, it is so nice, and I send my good morning to all the members, all the delegates, committee members of Andheri Oshiwara Study Circle today. I hope you are seeing my video properly. Though I am not able to see my video in my computer, I don't know what is the technical issue about it. I could not decipher the reasons, but still, if you are able to see me, well and fine. I don't want to see myself again.
So it's visible. It's visible. Yeah.
The today's topic. I am visible and properly audible.
Yes, sir.
Yes, sir. Perfect.
Hello. Okay. Thank you. Thanks a lot. Lovely. Today's topic is the tax audit issues, and I am going to deliberate on the many technical sides of the tax audit. Why not sharing this screen? Just a minute, sorry. There are many types of audits in income tax. First, as we all know, best is 44AB, which we give reports in Form 3CA, 3CB, and 3CD. Then we have audit under Section 12A for the charitable bodies, and 1023C also, in which we give reports under Form 10B and 10BB. Then we have a report under Section 115JB, which is given in Form 29B for the book profits of the year. Then we have the report under Section 92B for specified international and domestic transactions and transfer pricing issues. Then we have a special audit report under Form 6B under Section 142(2)A, which we call a special audit, which are assigned by the commissioners. And many more sections are there in the Income Tax Act in which different kinds of audits are required. But today I will be concentrating basically on 44AB. Now, when I come to 44AB, the first subsection is subsection A, which says every person carrying on business. See, in my presentation, I have highlighted all the important words by the red. So that they are the keywords in this whole presentations. Carrying on business if total sale turnover or gross receipt in business more than 1 crore. Now, subsection A is applicable on businesses, not on profession or any other thing. It is purely for business. And it says, if total sales turnover or gross receipt in business is more than 1 crore, then section 44AB will be applicable, and the SSC would be required to get his account audited and file the necessary audit report with the income tax department. Now, as we know, our netas, our finance department, everybody is an expert in how to make the law complicated. As we know, long time, there was only one thing. If sale is more than 40 lakh, audit. If sale is not more than 40 lakh, no audit. Which increased to ultimately 1 crore. Then even then it was simple. If sale is more than 1 crore, audit. If sale is less than 1 crore, no audit. But now it has become a very complicated issue to decide whether to audit or not to audit. Now, when I say 144 ABA, one thing is clear: if more than 1 crore, the audit is there. But then there are two provisos, which says 1 crore to be replaced with 5 crore if aggregate of all amounts received, including, mind it, aggregate of all amounts received, including amount received for sale, turnover or gross receipt in cash, does not exceed 5% of the said amount. Aggregate of all amounts would include any receipts. All the receipts include even the receipts of the loan, even the receipts of the rent or anything. Any sale receipts, receipts from the partners, receipt for the loans, and all kind of receipts you have to total up, and then see whether the cash elements in that total sale, total proceeds is more than 5% or less than 5%. If it is less than 5%, then you have scaled this this provision, but there are second condition also, and both have to be fulfilled to get the exemption limit of 5 crore. The second condition is aggregate of all payments made, including expenditure in cash, does not exceed 5%. All payments, purchases, expenses, payment to partners, repayment of loans, and whatnot. All the payments have to be totaled up, and the cash element should not exceed 5%. If both the conditions are met, that is, the amount received in cash are not more than 5%, amount paid in cash are not more than 5%, then the limit of 1 crore of 44 ABA should be read as a limit of 5 crore. And in that case, the tax audit will not be required if your turnover is less than 5 crore. If it is more than 5 crore, then the audit will be required. Now, subsection B. Subsection B is saying carrying on profession if gross receipt more than 50 lakh. 44 AB becomes applicable if the SSC is carrying on profession and his gross receipt is more than 50 lakh. He is liable for getting his accounts audited. Subsection C says, if carrying on business where deemed profit are to be assessed under section 44 AE, 44 BB, 44 BBB, and if profit claimed is lower than the deemed profit, then you have to get your account audited, and 44 AB will get connected. Now, AE is the applying of hiring of leasing of goods and carriage. BB is mineral oil exploration, and BBA is the foreign companies in construction and turnkey power projects. If you are carrying on these businesses and your profit claimed is less than the deeming section provision, then 44 AB audit is required to be done. And if you are showing income more than the deeming provision income, then the audit is not required to be done. Now, in subsection D, if carrying on profession and profit deeming under section 44 ADA, if this section 44 ADA, I will be covering slightly later also in detail. 44D subsection D is saying if carrying on profession and profit is less than deeming under section 44 ADA, that is 50%, then you have to get your accounts audited. See, if the profession is there and the profits are less than 50 lakh and the net profit rate is more than 50%, no audit. But if net profit rate is less than 50%, it is required under subsection D of the 44AB. Now, subsection E says carrying on business. Now, this E is not applicable on profession minded. It is carrying on business. If provisions of section 44AB4 are applicable and his income exceeds the maximum amount not chargeable to tax, then the 44AB is triggered and the audit is required to be done. 44AB4 we will be discussing slightly later on detail also. If his income is 44 is applicable and his income is below taxable limit, then even then the 44AB will not be triggering and the audit will not be required under section 44AB. The accounts to be audited and furnished by a specified date. This amendment was made in assessment year 2021. Before that, the section was saying the audit report is to be submitted by 30th September. It was a fixed date as per the Income Tax Act. Now they have said accounts to be audited and furnished by the specified date. And a specified date has been defined, which says a specified date is 1 month prior to due date under section 139(1). So now for the current year, because as on date, the due date under section 139(1) has been extended to 30th November. So the tax audit report is required to be filed by 31st October. That is 1 month before the specified date under section 139(1). Now, in past, what used to happen, once the date was extended for filing the return, there was a lot of hue and cry whether the date for filing the audit report has also got extended or not. And then government has to bring out another notification that yes, it is also extended. But now they don't need to say anything. They have to simply extend the date under section 139(1), and the date for submitting the tax audit report gets automatically extended, which should be 1 month prior to the extended date under section 139(1). Now, 44AB is also having certain very important provisos which have to be deciphered. Proviso 1 says section 44AB will not be applicable to persons who declare profits in accordance with 44AD1 and his total sales turnover or gross receipt in business does not exceed 2 crore. Now, this was the amendment made. Mind it, section 44AB will not be applicable to a person who declares profits in accordance with 44AD1 and his total sales turnover or gross receipt in business does not exceed 2 crore. Now, this proviso is applicable only on business. So, if in the case of business, you are returning the income which is more than or equal to the deeming section profit of 44AD, that is 8% or 6% as the case may be, then the audit report under section 44AB is not required to be submitted. However, if your profit is less than the 8 or 6%, then audit report will be required. Now, for this purposes, the limit of 1 crore has been increased to 2 crore for the purposes of business. This limit is not applicable minded for professionals. They are still being worked out on the basis of 50 lakh turnover and not on the basis of 2 crore turnover. Now, provision 2, 44AB is not applicable on who derives income of the nature referred to in 44B and 44BBA. Now, 44BBA is 44B is the section for non-resident in shipping business, and 44BBA is for non-resident in operation of aircrafts. Now, because there are specific sections in the Income Tax Act for the assessment of these businesses, that's why the 44AB section is not applicable on the person who are carrying on these businesses, whatsoever may be their receipts or whatsoever may be their profits, because they will be assessed according to a specific section provided in the Income Tax Act. That's why the proviso is there that 44AB is not applicable on who derives income of the nature referred in 44B or 44BBA. Now we come to Proviso 3. Proviso 3, when a person carrying on business or profession is already mandated to get his account audited under any other law, then see, there are two situations in the while we audit the 44AB. One type of SSEs who are to be not audited under any other law, there we issue report under section 3CB and 3CD. There are other kind of persons like private limited companies or limited companies who are mandated to get their accounts audited under any other law, and there we issue report under form 3CA and 3CD. Now, the basic difference between the two kind of report is, in 3CA, we do not certify the true and fairness of the financial statements. We certify true and correctness of the statements under in form 3CD, which we have submitted. While in 3CB, we certify the true and fairness of the financial statements and also the true and correctness of the information given in the form 3CD. Now, if an SSE is required to get his account audited under any other law, he has to submit report in 3CA and 3CD. Otherwise, he has to submit report in 3CB and 3CD. Now, one thing is to be there. We all know that in the case of a company, the audit report is required to be submitted under the law, under the Companies Act. And so we file 3CA and 3CD. Now, in LLP, behind it, there is a section 34(4), which says to be audited in accordance with rules. Rule 24 is the rule which prescribes that, Rule 24 of the LLP rules, which prescribes that if turnover is more than 40 lakh or contribution is more than 25 lakh, the LLP is required to get its accounts audited. So in my opinion, if an LLP is there whose turnover is more than 40 lakh or contribution is more than 25 lakh, and audit report under the LLP Act has been issued, then we have to issue the report under the 44AB in form 3CA and 3CD and not in 3CB and 3CD, because though the LLP has been defined as a partnership firm in the Income Tax Act, but under the LLP Act and the section 34(4), the audit is required. So the Proviso 3 will be covering it up, which says that when a person carrying on business or profession is already mandated to get his account audited, and LLP Act is mandating the audit, and hence Form 3CA and 3CD, in my opinion, will have to be given in such situations of LLP where turnover is more than 40 lakh or, mind it, or contribution is more than 25 lakh. They are either conditions, not cumulative conditions. Either of if one is being met, then 44AB will be required to be audited according to 3CA or 3CD or 3CB. Then we come down to 44AD, AD1. All these sections are very important because they govern whether we have to get the account audited under 44AB or not. And so I am covering these 44AD also. 44AD1 is the provision which has been referred in Proviso 1 to 44AB. 44AD says eligible SSE. Mind it, not all SSEs, eligible SSEs. I will come down to the definition of eligible SSEs later on. Eligible SSEs engaged in eligible business. Now, businesses also have to be eligible. Not all businesses are covered in 44AD. Which also I will be covering slightly later on. Eligible SSE engaged in eligible business is sum equal to 8% or 6% of the total turnover or gross receipt on account of such business, or a sum higher, mind it, or a sum higher than aforesaid sum claimed to have been earned by the eligible SSE shall be deemed to be profit of such business. Now, if this condition is met, that is, you are showing the profits of 8% or 6% or higher amount of your turnover, and your turnover is less than 2 crore, then you are covered in 4481, and you don't need to get your account audited under 44AB. Then the 8% or 6% income must be the income under profits and gain from the business head. Suppose, for example, there is a person who is doing some business, and his income from business is say 10 lakh rupees. Not 10 lakh, you can say, okay, let it be 10 lakh. It's 10 lakh rupees, and he is also earning an interest on FDRs, which are undertaken to be assessed under the head other sources. Then the 8% or 6% income has to be seen of the business profit, that is 10 lakh limit. The FDR interest will not be added in 10 lakh. When you are filing the return, then 8% you have to take from the total turnover, and then add the income from FDR to come to the total income which is required to be assessed. That is, the 8% limit or 6% limit is for the income under the business and profit and gain from the business. Income accessible under the other heads of business like FDR interest, as I say, rent, etc., not to be considered for 8% or 6% limit. And this was also confirmed by the decision of Allied Construction in 291 ITR 80 at 16 pages. Now, one thing I have to slightly differentiate, that is, suppose my FDR interest generally is in other sources, but if I am having the business in which I have given the FDR as security money to my supplier or to my customer, and without which I could not have done business, and I get the interest from that FDR, then this interest, in my opinion, this kind of interest of FDR, in my opinion, would be a business income and not in other sources, and should be so covered under the 8% or 6% limit. So we have to see even if FDR interest is there, whether it is liable to be assessed under other sources, or is it liable to be assessed under the Business Act, depending on the nature of the FDR which has been made. Similarly, is the business head and may not be accessible under the property head, depending on the nature of the rent and the nature of how you are exploiting the building for earning the rent. Now, when I said few slides back, eligible business. So we have to see, number one, profession is not a business, and so naturally it will not be covered in 4481. Then commission or brokerage business is also not an eligible business, and so will not be part of the 4481 or agency business. So commission or brokerage and profession and agency business are not of eligibility, being they are not the eligible business for 4481. Now, if for 4480 we have eligible business of multiple types, there are different types of eligible business being carried on, then turnover to be clubbed for all such business, because the turnover is required to be seen qua SSE and not his qua business. And so multiple eligible businesses may, you have to add the turnover of all the businesses clubbed together to come to the conclusion whether the limit of 2 crore rupees or 1 crore rupees, as the case may be, is being met or not. Then if you are having a mixture of eligible and non-eligible business, then turnover of eligible business only has to be seen. Suppose you are carrying on the business of trading and you are also doing business of commission or brokerage, then you have to see the turnover of the eligible business, that is business of trading. The turnover of commission or brokerage will not be added in the turnover to check the limits for 4480. Now, one thing very important here, I can simply say it up. Notwithstanding anything contrary to section 28 to 43C. Now, what is this? 4480 is a non-option section which starts with, the section starts with notwithstanding anything to contrary in section 28 to 43C. This means if you are applying 44AD, then section 28 to 43C will not be applicable. There are many repercussions, positive and negative, both of this non-obstante clause. Number one, if you are getting assessed under 44AD by applying 8% or 6%, whatever, you will not be eligible to get your depreciation separately. Depreciation will be deemed to have been allowed in the limit of 8% profits, and it will not be eligible to be taken to be separately. Or any other deductions which are available in from the section 28 to 43C will not be allowed separately when you are taking the deeming section 44AD. But there are advantages also, like 48.3, payment of cash more than 10,000 rupees, which normally in most of the cases gets disallowed. It is added to the income. But if your income is being assessed in the 44AD, then the disallowance of 48.3 will not be done. Similarly, disallowance under section 40AIA also will not be done for not deducting the TDS within time and paying to the government. So a lot of things gets benefit also, and many things get negative also, because you don't get depreciation separately. You don't get the deduction for partners interest and salary separately, but you are saved from the disallowances under 48.3 and 40AIA and some other disallowances also, 40A2B, whatever. Anything below 43C and more than 28 is not covered under 44AD. One thing I would like to share, one thing here itself, which says there's quite a dispute running on between different groups of the persons or professionals. The section says a sum equal to 8% or 6%, as the case may be, of the total turnover or gross receipt on account of such business, or a sum higher than aforesaid sum claimed to have been done. In my personal opinion, when the 44AD is applicable, it is presumed that the man is not maintaining any books of accounts, and hence he has to pay the tax on the basis of 8% of his income. But there may be situations where 8% profit is coming 5 lakh rupees, and your accretion in the bank statements, bank balances, is say 10 lakh rupees. Then, in my personal opinion, the SSC should submit his return on the basis of 10 lakh rupees and not on the basis of 5 lakh rupees. Though there are certain disputes in this, there are certain opinions also of the same. The AO has no power to enhance the income when the assessment is taking place at 44AD. It is true, under 44AD, the AO is not having any power to enhance the income, but the power can be there in section 69 and 69A, because your investments are increasing by a figure which is unexplained. Now, if for a minor variation, say from 5 lakh rupees, 5,000, 10,000 here and there, it may not matter because you are not maintaining the books. It's okay. But if the variation is large and quite visible from the bank statements or the accretion of your assets, then in my opinion, the higher income should be declared under section 44AD and not only 8%. Otherwise, later on, when somebody matches your investments with the accretion of income, this may be a problem. Now, this is a slightly complicated section, 44AD4, which is referred in 44ABE. This says, where an eligible SSE declares profit for any previous year in accordance with the provisions of this. Let me read this whole section verbatim, and then I will explain by an example when the things will become clear. Where an eligible SSE declares for any previous year in accordance with this section, and he declares profit for any of the 5 assessment years relevant to the previous year succeeding such previous year, but not in accordance with the provisions of section 1, he shall not be eligible to claim the benefit of the provisions of this section for 5 assessment years subsequent to the assessment year relevant to the previous year in which profit has not been declared in accordance with the provisions of subsection 1. I don't know whether any more complicated language could have been used for this section or not, but our law writers are expert in making the language which is always confusing and difficult to read. Let us take an example. Case in assessment year 13-14, an SSC opts for 44 AD and he files a return on the basis of 8% of the net profit on his total turnover. Now, no problem, 13-14 he has filed, 14-15 he has filed with the 8% profit, no issue. Now in 15-16, his turnover slightly goes up and he sees that his income definitely is coming very high under 8% and generally his income is much lower. And he opts to 44 AB audit so that he can return his income below 8% threshold. Gets in the 44 AB in 15-16 and files his return with the audit report. Now what happens? Then for 5 years from 15-16, that is 16-17, 17-18, 18-19, 19-20 and 20-21, he cannot opt for presumptive scheme of 8% under section 44 AD. For these 5 years, he will have to get his accounts audited and declare the profits as per the audited accounts. After 5 years, he can again come down to 44 AD limits and opt for 8% or 6%, whatever the case may be. If anybody is having any confusion in this, I can repeat. Now read this section and then come to my example. Where an eligible SSC declares profit for any previous year in accordance with the provisions of section, this means he has applied 44 AD 8% profit in 13-14 assessment year, and he declares profits of any of the 5 assessment years relevant to the previous year succeeding such previous year, not in accordance with the provisions. That is, in assessment year 15-16, he has not returned according to 44 AD and he has returned income according to his audited annual accounts under 44 AB. Then for next 5 years, he will not be allowed to take option under section 44 AD by filing return of 8% net profits. He will have to get his account audited for next 5 years in the section 44 AB and then file. After 5 years, he can again come down to 8% or 6%, whatever the case may be. Then section 44 AD, you use the word eligible SSC. And I said that time I will be covering eligible SSC slightly later. So now is the time to cover eligible SSC. Eligible business we have covered, that which are not part of 44 AD. Commission and brokerage and for not eligible business. Now, who is eligible SSC? Eligible SSC is individual, HUF, partnership firm who is resident. Mind it, a non-resident partnership firm is not eligible SSC, though I don't know whether firm can be non-resident also or not. But not LLP. Because the Income Tax Act defines partnership firm including LLP. Here they have given a specific mention that the eligible SSC, though partnership firm is eligible SSC, but LLP is not an eligible SSC. And I think the basic reason is the LLP is required to maintain the account under the LLP Act. And hence, is not part of the eligible business. So whatever may be the sale, whatever may be the percentage of profits, LLP has to go for 44 AB audits if the turnovers are more than the limits. Any SSE who has not claimed a deduction under section 10, reversely, anybody who is claiming deduction under section 10, 10AA, 10B, 10BA, or etc., or under the heading C of chapter 6A are also not an eligible SSE. Not whole chapter, only heading C है, वो अगर वो SSE claim कर रहा है या deduction under section 10A, 10AA, 10B and 10B is claimed, then he will be not an eligible SSE and he cannot opt for section 44AD. Then eligible business also is saying eligible any business except good carriage. Goods carriage is also not eligible business for 44AD. Because goods carriage, there is a separate section 44AE, and that's why a specific exemption has been, a specific disallowance has been carved here, that eligible business will not include the goods and carriage also. Other than the commission and brokerage, agency business, and profession. So goods and carriage is also 44AD. Now, after all this discussion for about 40 minutes, this is a chart where we can see we have to get the accounts audited and where we don't need to get the account audited. Just a minute, sorry, sir. Now, if for business turnover up to 1 crore, profits less than 8% or 6%, audit is required. Turnover up to 1 crore, net profit more than 8% or 6%, audit is not required. Turnover more than 1 crore, less than 2 crore, net profit less than 8% or 6%, audit is required. 1 to 2 crore turnover, net profit more than 8% or 6%, audit is not required. Then 2 to 5 crores, net profit option is not available, it is not applicable here. The only thing is if the cash receipts and payments are more than 5%, then audit is required. If cash receipt and payment are less than 5%, then audit is not required. And for more than 5 crore, the audit is required in all the cases without any exemption. Then profession, more than 50 lakh rupees turnover, audit is not required. Sorry, audit is required. NP condition is not there. Sorry, audit is required. Less than 50 lakh, if your percentage of profit is more than 50%, no. If percentage of profit is less than 50%, yes. So this is the net chart on which we can check up whether the audit will be required or not. Then before I go further, there has been a lot of confusions on the issue, what is business, what is profession, and things like that. There have been issues regarding nursing homes and diagnostic centers, whether they are business, profession. In my opinion, the nature of business is a business or profession will depend on the manner the profession is being carried on. Say if a doctor is individually sitting in his clinic and having one small ultrasound machine and all that and doing all the investigation himself, it is profession, nothing but the profession. But if it is a large nursing home, say running 20, 25, 30 rooms, many doctors, are being done, if the head business, not under the head profession. In case the entity is being run in the as a company or LLP and things like that, then it will be definitely a business, not a professional income. In one of the cases, it was held in diagnostic center. It was 225 ITR 936. at page 942 and 943, the word was very nicely used. The quote said, is professional carrying on business? He said the professional is carrying on business. He is a professional. A particular doctor definitely is a professional, but he's carrying on business. Because the nature and the manner in which the activities are being done will depend whether it will be classified under the head business or nursing home. Profession. For nursing home also, there is a very specific case, Ashok Nursing Home, 9 SOT 61 Delhi. This is unreported judgment there. Which says nursing home, depending on the size of nursing home and the manner of being business and not a profession. So now we come to the specific audit under 44AB. Till now we were discussing whether 44AB will be required or required, who will we have to do, who has not to do, and things like that. Whatever I am now discussing is my personal experience with audits since 1982, the Act. These are the general issues which give problem. Communication with the previous auditor is very much required, even in the case of tax audits. Still, I hear many times some, सर जी ये तो टैक्स ऑडिट है, कंपनी ऑडिट तो है नहीं, इसमें क्यों हम कम्युनिकेट करें प्रीवियस ऑडिटर से? Please mind it. It is the attest function. We are certifying true and fairness of the financial statements, and communication with the previous auditor is definitely required for carrying out the audit of AOSC if the auditor is getting changed. Then one thing more we lack, mostly of us lack, that is the management representation letter. We don't take management representation letter from the SSC. There are many issues in which without management representation letter we just cannot certify. For example, one example, there is a requirement of reporting demands created under the tax laws other than income tax. Now, unless we ask and get a letter from the management that which are the demands under the various acts which have been created during the year, how as an auditor we can come to the conclusion what are the demands created? Each and every file of we have to fall back on the representation. Representation letters are very much required. Are lacking. We are lacking in taking the management representation letter. I would request all the members to please be slightly conscious about management representation, which should be taken even in the case of tax audits, wherever the requirement especially is there. Then we also get the applicability of accounting standards. All accounting standards are fully applicable on tax audits. So I have seen members discussing that he has, for example, a assessor sold his WDB of rupees, and he sold the car for 7 lakh rupees. The SSE has shown the 7 lakh as the sale in the books accounts in his finance. And the member says, हाँ ये तो इनकम टैक्स एक्ट में तो अलाउड है कि हम सेल वैल्यू को उसमें से लेस करते हैं बिल में से. Yes, income tax allows it, but accounting standards doesn't allow it. As per accounting standards, we have to work out the loss or profit on the sale of asset, book the loss or profit in the profit balance sheet and certify. If I am not showing that loss on We have to certify the financial statements which are made according to accounting standards. Whatever adjustments have to be made can be made in the quotation sheet of the Income Tax Act or through ICDS adjustments. But accounting is but the balance sheet and profit loss account should be made according to accounting standards, not what the Income Tax Act has provided, unless the Income Tax Act has provided which is similar to accounting standards. If Income Tax Act is saying something different than accounting standard, then for financial statement we have to fall back on accounting standards, not on the Income Tax Act. We have to have two windows in our mind. One, when we are making the financial statement, checking the financial statement for true and fairness, we should shut out the income tax window and apply the accounting standards. And when we are working on the computation of the income, then we should shut out the window accounting standard and apply the income tax actions for working out the income and the computation. So this is very important. Lot of persons say section, for example, this prior year expenses and things like that. AS1 accounting, I have seen many need the are accompanying the final statement, and we are still certifying this had to be true and fair. So please do not, especially the AS2, 5, 16, 22. 22 is the accounting standards for taxation. Again, saying many balance directly into the accounts of the partner's capital, not to the profit and loss account. Profit that without business of incomes, or depending on the materiality. If the materiality is not there, then okay, you don't make a provision for deferred tax. But for taxation, for income tax, the provision should be made in the accounts. The
Ashok sir. Hello.
On materiality accounting standards I had covered. Materiality is also very, very important as far as 44AB is concerned. It is not that we have to totally ignore the materiality. I have seen balance sheets showing 100 rupees as a prior year expenses. Something ridiculous, something ridiculous. When it is a prior period and when it is not a prior period, itself is a has to be governed by AS accounting standard 5, and not simply because the bill was received in relating to March 20, it becomes the prior year. No, not necessarily. We have to see whether AS5 is being hit for declaring it as a prior year expenses or not, and materiality has to be seen even in the tax audit. We have not to report anything which is totally immaterial on the size of the business, and materiality has to also be seen from the auditing standards point of view, how we have to check up whether the amount will be material in the present case or not. Auditing standards are also, as we all know, are totally applicable on auditing under section 44AB, and so should be kept in mind.
Sir, sorry to interrupt, but
Down to the definition of turnover. The word used in the 44AB is the gross turnover. Now, turnover has not nowhere been defined in the Income Tax Act, but our institute in its guidance note has defined the turnover, and there is a guidance note on financial terms in which also the turnover has been defined. And the institute's guidance note has been held to be followed by the Supreme Court also in one of the cases, Woodward's Governor 312 ITR 254. So we can fall back on that. Gross turnover has to be understood in the commercial sense, in which a normal businessman will understand its gross turnover. Now, is GST a part of turnover? There are two issues in this. There are two types of accounting policies. If the businessman is issuing the sale bills on cumulative basis, say selling something 500 rupees, and he is making the cash memo of 500 rupees, but while entering the cash memo in his books of account, he is dividing the 500 into sales and the GST. Then this means he is using the inclusive method of GST, and so the GST will be part of the turnover, because his turnover then is the 500, out of which he is breaking the GST and the sales. So his turnover will be 500. But in case a person is issuing the bill of say 1000 rupees, charging GST separately, CGST and SGST separately, and in the books of accounts also the CGST and SGST are being credited to a separate account and sales to a separate account. This means he is following the exclusive method of GST, and hence GST will not form part of the turnover. So we have to see whether he is following inclusive method or exclusive method. In case of exclusive method, GST is not part of turnover, but in case of inclusive method, GST is a part of turnover. Now, commission and labor charges, etc., are part of turnover. Sales commission, agent, stockbroker, their income is also part of the turnover. How the turnover will be determined in the case of a stockbroker who is dealing in speculation and the derivative business, I will cover slightly later on. But for turnover, we have to see what it is understood in the commercial sense and apply accordingly. Then how the turnover will be determined in the case of a speculative business and derivatives. For this, we will have to fall back on the Institute's guidance note, which says, in the case of a day trader, a speculator and derivative transaction in security and commodity markets, a sum total of differences, whether positive or negative. I will show you next slide the exact example for it. But we have to club together the positive and negative, and that will become the turnover in the case of a speculative business and derivative. And also premium on sale of options, unsettled transaction at the year end will also form part of the turnover. Now, for working out the turnover, example is there. Suppose in the future, in RIL share, he got the profit of 500 rupees. In Tata share, he lost 200 rupees. In Infosys share, he again got 800 rupees profit. So total profits were 1,300. Total losses were 200. So turnover will be A plus B, that is 1,500 rupees. That are the net profits or losses from the speculative business or derivative business, not the gross turnover. So this is to be kept in mind, because there are many times member do ask, वो तो डेरिवेटिव में तो उसकी 100 करोड़ की टर्नओवर हो गई, नहीं, इसकी टर्नओवर वो 100 करोड़ नहीं है. His profits or losses from the derivative business or speculative business total together will form the turnover for determining whether 44AB will be applicable or not. Now, Form 3CB and 3CD. Form 3CB requires assurance whether the financial statements are true and fair, and that particulars in Form 3CD are true and correct. There are two situations in the two places. Initial portion of Form 3CD, I'm just a minute, in Form 3CA, in part 2, you have the verification, and para 3 you have to verify for 3CD. Para 2 you have to verify for true and fairness, and para 3 you have to verify for 3CD correctness. Now, there may be a lots of observations and comments which have to be given, because many places in the audit report we may have to give our comments for anything. Then if the comment is in relation to the true and fairness of the account, the comment should be after para 2. There is a space in the report, and while filing the electronically, you can go on adding number of lines, and there is no limit for number of lines which you can add. for your observations or comments or discrepancies or inconsistencies, if any. For any observations on 3CD, you should give observations after point 3, after para 3. For true and fairness of the accounts, if the observation is there, it should be after para 2. And if the observation is for true and correctness of the account, for 3CD, it should be after para 3. Then it says that I have given the language of 3CB, which says subject to following observations, qualifications, if any. So these observations and qualifications should be given. And there are many observations and qualifications which are required to be given. For a very small example, account pay check. We have been certifying from years that account pay check, we cannot certify whether they are account pay or not because the checks are not in possession of the SSE. So these are kind of observations or many other observations also which need to be mentioned in the 3CB and 3CD. So we have to be very careful in giving all the observations depending on the true and fairness on para 2 and giving on the true and correctness of 3CD in para 3. Now we come down to some important clauses of 3CD. Clause 4, whether the SSE is liable to pay indirect tax like excise duty, service tax, sales tax, custom duty, GST, etc. This has to be given, and it has to be given for all the branches. If SSE is having 10 branches for which he is having separate GST number, then the GST number has to be given for all the branches. And this is what has been suggested by the guidance note also on para 17.6 of guidance note of 2014 of the institute. Now the issue is, if applicable but not registered, then appropriate disclosure should be given, because the clause says whether the SSE is liable to pay. So if I am liable to pay, I know that the SSE is liable to pay the tax, but he has not himself registered. Then the observations will be there in the 3CD report. The second situation is registration has been taken but not liable to pay. He may have taken registration, but he is not liable to pay because of any exemptions or any situation in the particular act. So that also can be has to be given through an appropriate disclosure. Then clause 13A, which says method of accounting employed. Here we have to mention whether the method of accounting is cash or mercantile. Now mind it, differentiate between the accounting policy and method of accounting. Accounting policy and method of accounting are not the same thing. Accounting employed, method of accounting is either cash or mercantile. And the accounting policy is the various policies which according to we govern the finalization of accounts. Like for example, the method of valuation of closing stock, whether it is on the FIFO method, whether it is on average weighted average method, anything like that. Then 13D asks details of deviation, if any, in the method of accounting employed. Now, change in the accounting policy will not be reported in 13D. Change in accounting policy is not the change in method of accounting employed. Method of accounting employed change will come only when I am switching from cash to mercantile or mercantile to cash. If I am continuing cash or if I am continuing mercantile, then any change in the accounting policy will not get reflected in 13D. That will be reflected in your accounting notes, that your balance sheet, the profit and loss account is subject to the following changes in the accounting policy in terms of the accounting standards and accounting auditing standards. But in 13D, we will only report if there is a change in the method of accounting, that is cash or mercantile. Then 13DEF, which says whether any adjustment is required to be made to the profits or loss for complying with the provisions of section ICDS notified under section 145(2). Here we have to make out a chart in case the provisions in the books of accounts are not according to ICDS. and they are according to the accounting standards. So then we will have to say, for example, depreciation, the very small thing, depreciation. In depreciation, we have to provide for the profits and losses of the sale of the assets in the profit and loss account. But ICDS says no. So that will become variation as far as ICDS is concerned, and that needs to be reported by way of chart. And ICDS also requires the disclosure of accounting policies in respect of those 10 ICDS. So even if there is no variation in any income between ICDS, but we will have to disclose the accounting policy which have been followed for those 10 ICDS which have been notified. Then we come down to clause 14B, section 145A. 145A in respect of, we have a very detailed discussion on page 99 of the guidance note of 2014. Actually, before GST era, the problem was this: ki excise duty became accrued when the production took place and not when the sale was taking place. It accrued on the time when production took place, but it was payable when the goods were dispatched. So whenever the goods were purchased and they were lying in stocks, the excise duty became accrued. It was liable to be provided in the books of accounts, and therefore it was liable to be added in the closing stock valuations also. But though ultimately, when after doing all the calculation on the 145A, it was profit neutral. The profit was not varied because of the applicability of section 145A. But now after GST, GST is accruing and payable both at the time of supply. It's not at the time of production. So again, this thing becomes immaterial. And so we have to see the guidance note for the detailed working of the 145A. One thing is important: the Supreme Court in Indo-Nippon Chemicals Limited 261 ITR has opined that adjustments under section 145A are profit neutral. So when these adjustments are profit neutral, so generally the variation will be nil for clause 14B for section 145A. Then clause 17. Now here I would first discuss clause 17 and then discuss one of the practical situations. Clause 17 asks whether any land or building or both is transferred during the previous year for a consideration less than value adopted or assessed or accessible by any authority of a state government referred to in section 43CA or 50C. Now, if I am auditing a proprietorship business and the proprietor has sold his residential house, will it be reported in 44AB? I think no. I am auditing the business transactions of the SSE and not all his personal transactions. I am not reporting on all his personal transactions. And so I have to report in regard to sale of land and building in clause 17 of the assets which were the business assets and which were reflected in the financial statements of the SSE. And that's why what I always advise, as far as audit report for individuals were concerned, we should not write the name of the individual on the balance sheet, on the top of the balance sheet of profit and loss account. We should write the name of the business which we are auditing. To demarcate that it is a proprietorship business, you may mention the name of the proprietor along with the capital. Where you write the capital, you can write capital bracket mein proprietor so and so. That will be sufficient purpose. But we should write the name of the business on the top of the balance sheet and the profit and loss account. And our report also should refer to the name of the business, not the name of the proprietor. Because the balance sheet is not having all the assets of the proprietor. Balance sheet is having only the assets and liabilities of the business of the proprietor. And if I say that I am auditing Mr. A and his balance sheet is true and fair, and that balance sheet is not having all his assets, is not having his FDRs, it is not having a savings accounts also, or the balance sheet is not having the personal loan taken for housing by that assessee. So it will not be a true and fair balance sheet of Mr. A. It will be true and fair balance sheet of the business being carried on by the Mr. A. So the name on the balance sheet and the report, in my opinion, should be name of the business of the assessee, not the name of the personal individual of the assessee. And if that is the case, then this clause 17, etc., will not have to be reported unless the asset sold was the business asset being reflected in the financial statements. And if they were sold and below the values in 50CA and 43CA, then we have to report. In these sections, there are a lot of times disputes regarding two opinions, whether a particular thing is falling into 43CA or 50CA or not, and things like that. For example, I may share one thing. In one of my practical cases, one assessee purchased agricultural land, and the value of purchase was less than the value on which the stamp duty was paid. Now, this asset was purchased for the business of the assessee, but it was agricultural land. There is one decision of a tribunal which says the agricultural land is not covered by the word capital asset, and so this section will not be applicable. So what I did, I mentioned the case and said the assessee has relied upon this case in this respect, and hence this section is not applicable in my observations in 3CD. So wherever such disputes or two opinions are there in the provisions of section 43CA, 50C and 56(2) and all those, let us use the observations area in giving our observations. Then the issue again, land and building forming part of the block, whether the block is still positive, section 50 not applicable, auditors stand. There are different decisions of different courts on this issue, whether it will be applicable or not. So wherever there are two opinions, we can take one opinion, but it is better for us to disclose it through the observations. Then clause 18 is the depreciation. Here also there are lots of disputes, maybe even depreciation rates, issues and additional depreciation, disallowances in past by the assessing officer, dispute regarding rates applicable. Suppose in 3 years back, when the scrutiny assessment was being done of the assessee, the AO disallowed certain some amount of depreciation. So the WDV as per the income tax records and WDV as per the books of account will change. Now, if we have accepted that disallowance and not gone into appeal, then naturally we have to rework out our WDV and show the opening WDV as per the revised working after disallowance. But in case we are in appeal and the appeal is pending and we want to contest the disallowance by the AO, then we have to take the opening balances as per our records, which is not matching with the records of the AO. In that case, we should give an observations in our report that the opening balances have been taken as per the WDV records of the assessee and not as per the records of the assessing officer because of the disallowances which are under appeal. And similarly, in other issues also, wherever there are two opinions, the observation area can be used. And don't hesitate in using observation area for anything, maybe 10, 20, 30 observations, just give it. Then clause 20B, details of contributions received from employees for various funds have to be given. And in this, actual date of payment has to be given. Now, mind it, this clause is only for received from employees, that is amount deducted from employees. It is not to be reported for employer share. It is to be reported for employee share. Employer share of PF or ESI will be reported in 43B and not in 20B, which is for section 224.10. It is not for 43B. So, and this section is applicable for the amount deducted for PF and ASI from the employees. So only employees amount have to be reported here and not the employers. Employers amount which is due on the closing date has to be reported in section 43B area. Now clause 21 says amounts debited to P&L account being one thing which is very disputable, which is penalty or fine for violation of law. Mind it, subclause A says we have to report penalty or fine paid for violation of law. All penalty may not be for violation of law. There may be named as a penalty, like if I am a contractor and I am constructing a building with a condition that if I don't construct within a 6-month period, then the person will charge 5 lakh rupees from me as penalty for late completion of the construction. Though it may be named as penalty, but it is not penalty for violation of law, it is penalty for contractual violation. So we have to differentiate between the violation of law and a contractual violation. Contractual violation will not be reported. Violation of law will be reported. Penalty, not interest. The Supreme Court has already held in many cases that interest is a compensatory in nature and not a penalty. So we have to very cautiously differentiate between the violation of law and violation of contractual obligations. So only for violation of law, a penalty paid has to be reported. Mind it, if the word used is other than penalty, but it is for violation of law, it should be reported. As is, if it is named word penalty, but not for violation of law, it has not to be reported. In lighter way, if you are challan for 1,000 rupees for wrong parking and you pay the challan and you claim the challan in the books of account, then that should be reported because it is a violation of law. Another example, you are having a connection of the power for 10 kVA load, and there is some checking, and they say your power load is lesser, and they charge some amount for increasing your load for violation of low load, that you have taken lower load than what your total load should be. Then that again is not violation of law, it is a violation of contractual liability. So it may not have to be reported depending on what is the agreement between and what are the acts prevailing in a particular state. Then section 14A, clause 21H. The amount of inadmissible expenses depends upon facts of the case, and this section is one of the most disputed section in the Income Tax Act, and not less than hundreds of cases whether the 14A will be applicable, whether the 14A will not be applicable, whatever the case is, or whatever is your opinion, please use the disclosure areas and observations areas for giving your opinion on section 14A. Then we come to clause 22, that is interest to MSME. Section 23 of MSME Act says that a amount to MSME should be paid within a certain period, and if it is delayed, then the interest is liable to be paid to the MSME by a certain percentage of interest. The MSME Act section 23 says that interest so paid to MSME will not be admissible under Income Tax Act. Income Tax Act is silent about it. But MSME Act says that the interest so paid to MSME will not be allowed in the Income Tax Act and under the Income Tax Act. Now, interest to pay to MSME, if not paid, then naturally this clause will become nil, because I have not paid any interest to MSME, so disallowance cannot take place. Unless I have claimed something, it cannot be disallowed. So if I have not paid any interest to MSME under MSME Development Act, then this section plainly says no, not to be disallowed anything. But then another issue comes into picture. If interest was liable to be paid to MSME under MSME Development Act, and I have not made a provision in the books of accounts, then depending upon the materiality of the amount, whether I am showing true and fair view of the profit or losses of the firm, of the SSE. No. If the amount is material, then I think we will and we should make provision for such interest which is payable under the MSME Development Act to MSME, whether paid or not by us. And if we make a provision in the books of account, then the amount will be reflected in clause 22, that because it has to be then disallowed. So this I have covered. Then clause 25, amount of profit chargeable to tax under section 41 and computation thereof. Well, what is the amount chargeable to tax under section 41? Chargeable to tax, not all. See, we write off a lots of amount in the profit and loss account, and all the amounts may not be taxable under section 41. We have to report only those amounts which are taxable under section 41, which we have credited to the profit and loss account. And how we have arrived at, for example, it says only if liability which has been claimed as expenditure earlier and written back is to be reported. I have claimed a liability as expenditure in past and written it back, then it will fall under section 41. If we have not claimed any liability in the profit and loss account but written back in the books of account, it will not be taxable under section 41. And there are multiple decisions of various high courts and tribunals on this issue. Unless the amount was claimed as expenditure in past, the amount will not be added under section 41 of the Income Tax Act. Old liabilities not written back are also not the amount liable to be added under section 41. This is the lot of practical time now. Faceless is there, so we don't know what will happen. But otherwise, lot of time ITOs were asking, "ये तो 3 साल से pending है, इसको income में क्यों ना जोड़ दें?" अभी क्यों जोड़ देंगे? Unless it is written back, it cannot be added to the income, howsoever old the liability may be. Unless it is written back, it is not an income. And second condition, the liability should have been claimed as expenditure in the past. In the case of a loan which has been written back, there are different situations, and in many situations the loan may not be an income under section 41 even if written back in the books of accounts, especially in the case of a term loans. So there are 1 or 2 cases in which the loans for working capital have been held to be added under section 41. Now, one thing more. This says amount chargeable to tax, even if written back in the profit loss account, should be reported. To be reported even if accounted for in income in P&L account. Because it is saying amount of profit chargeable to tax. How much is the amount that you can write, but you can give further also that this amount has already been written back in the profit loss account. Then clause 29, applicable to companies only, not to individuals, HUF, partnership, LLP or anybody. Whether during the previous year the SSE received any consideration for issue of shares which exceeds the fair market value of the share as referred to in section 56(2)(6)(b). This is in relation to the new issue of share if issued at a premium. If issued at a face value, it may not be a problem, but if issued at a premium, then this clause will have to be replied back, and the valuation has got to be done according to rule 11U and 11UA, and then see whether the addition or section 56(2)(7)(b) is applicable. Then we have to report about it. Then clause 29A, whether any amount is to be included as income chargeable under the head income from other sources, as referred to in clause 9 of subsection 2 of section 56. Now, again here also, if the SSE is individual, his individual transactions which are not part of his business transactions will not be covered under clause 29A. But in case of a business transaction, this clause will be hit, and we have to see whether such income are covered under this clause 9 of subsection 2 of 56. Then we have to report them. the same thing. Now 30A, whether the primary adjustment to transfer price as referred to in subsection 1 of 92 CE has been made during the previous year, then this domestic transfer pricing report has to be made out and reported. Then miscellaneous issues are there, especially the prior period. We have to and we should differentiate between the expenses relating to previous year and expenses relating to previous year which accrued in previous year but provided in the current year. The expenses which accrued in the current year may relate to previous year, but they are not expenses related to previous year. They are not to be reported under clause 27B. If the expenses were incurred for the year, maybe relating to previous year, are not the prior period expenditure in terms of AS5. And so please differentiate between these two things. Then clause 32, brought forward losses. In this also we have to make an appropriate disclosure. In case the brought forward losses are different as per our records of the SSC and as per records of the AO because of the past some disallowances or anything. And if that is so, then we have to make appropriate disclosures in the reports. Then section clause 32B, losses carryover. We have to keep in mind the section 79 for change in the shareholding pattern. And if in case the change in shareholding pattern is beyond a certain percentages, then the losses to that extent get lapsed. And so we have not to show that losses which has been lapsed as a carry forward losses. So section 79 has to be kept in mind while giving report for brought forward losses. Then here again, regarding deemed dividend, whether the SSC has received any amount in the nature of dividend so and so. Again, individual transactions of the SSC will not be get reflected. However, if the transaction is for the business and in the business final accounts, then they have to be reported. But this section is also a lot of controversies, and you may have to fall back on observations for this clause. Then, in general, in case there is a change in the auditor, and the previous year was done by some other auditor. I'm not talking about 3CA, I'm talking about 3CB, that is the partnership, individuals and HUF and all that. Then as per the Institute's guidance note, because we are certifying the previous year figures also in the financial statements, then and that those figures were audited by some other chartered accountant in the past year, then we should give a note on the notes and accounts that the financial statements of the company as at end of the year and ended after so and so, this language I have given, has to be reported that these were the figures, unmodified opinion on these financial statements by the previous auditor. So this also should be given, and that was what my presentation today was. And any questions, I am open to it. Have a good day, fit and healthy.
Hello.
Yeah.
Hello. Sir, okay, fine. I request CA Sachin Verma ji to address the question answers.
Yeah. Hi, Amish. Thank you, Ashok sir. So there are a few questions that have come on this chat box. I'll just go through one by one.
Sure.
Yes, sir. So the first question was from Kamlesh Ray. So the question goes like this: if a person carrying on share trading and crosses either sales or purchase turnover is 2 crores, whether audit of section 44AB applies?
Yes.
As the as the amount.
If he's in the share trading, that's not other than speculation and derivative.
Okay.
Other than speculation derivative, and his turnover is more than 2 crore rupees, or rather 1 crore rupees, he is liable for 44AB audit.
Okay.
If he's delivering shares and taking the receipt of shares, then naturally the turnover will be counted as per sale and purchase.
Right, sir.
Only in case of speculation business and derivative business, you have to see the net
only
profit
the
and
MTM.
losses.
Yes.
MTM.
Yes, yes, yes. So the next question is from CA Naresh Shah. If section 44 AD applied, then what about section 43B disallowance?
44 AD, 43C, 43B disallowance is not there.
Okay.
Because see, 28 to 43C is our non-obstante clause. 28 to 43C are not applicable.
Okay.
43B comes before 43C.
Right, right.
So 43B is also not
applicable.
Anything, not applicable. Anything
right.
coming after 43C will be applicable.
Okay. Okay, sir. The next question is from Amin Keshwani. Turnover is up to 1 crore and net profit is less than 8%. And this income is less than the maximum amount not chargeable to tax. Whether audit is applicable?
No, not applicable. Not applicable. Income less than 1 crore rupees, the net profit is less than 8%, but the net income is below the maximum charging, then it is not required. 44AB is not there.
Okay, sir. Then the next question is from Ambar Kothari. But I don't know, there is no context to it. Just the question is like, if the previous year we not availed 44 AD, we file return in ITR 3 then.
I could not get the question.
Yeah, exactly. So is Ambar online? Ambar Kothari? So there is no context to added to this. I'm not sure what exactly this means.
Amber sir, can you unmute and ask your query? Amber sir is online, I think so. Otherwise, you can proceed again.
Hello.
Yes, Amber.
My question is, मेरा question ये है कि last year अभी तक 44 AD अवेल नहीं करा है और अभी टर्नओवर 1 करोड़ से नीचे है, तो उसमें 8% से कम खा सकते हैं ना फिर तो?
He is getting his account audited. He is getting his account audited. He is getting his account audited ना?
Hello.
हाँ, उसके account audit हो रहे हैं ना पहले से.
Hello.
Yeah, Amber, can you hear?
Hello. Is my voice clear?
Not opting 44 AD.
Not opting 44 AD, but his profit was either more than 8% or he was getting his account audited in the 44 AD. अगर 44 AD opt नहीं किया है तो उसको आगे he can add 44 AD, no problem. Once he opted 44 AD, then for 5 years if he opts for 44 AD, then for 5 years he will have to continue. See, once again I am repeating, if for 1 year a man has opted for 44 AD, and then for next 5 years, if in any year he opts for 44 AB and not 44 AD, then for next 5 years he cannot opt 44 AD, he will continue 44 AD. Is it clear?
Yes.
Okay. Okay.
So the next question is what is it is from Meera Desai. What is the limit for FNO tax audit? Is it 1 crore?
It is 1 crore.
Yeah.
Just business. Just business.
Right.
No doubt
Right.
about it.
Right.
1 crore, 2 crore, 5 crore, as the case may be, depending on the fact of each case.
Okay. So this question is from me. So in addition to this FNO, so FNO transactions as of today are mainly bank transactions. There are no cash element involved.
Yeah.
So for example, a professional doctor, okay, earning a professional fees.
See, the doctor professional is not applicable.
Right. So what I'm saying, a professional, he's earning a professional fee. Okay. Apart from this, he's also having an FNO income. Okay. So now the cash component which the exemption that is the what we can say the additional exemption that has come up, that if the cash expense of payment receipts are less than 5%, then the audit is not applicable. So in that case, the 5% will be calculated only on FNO business income or the total inclusive
total all the receipts.
All the receipts, right? Okay.
All the receipts, including sales and everything, all total.
Right.
That is the whole gross.
Right.
I personally feel it will be very, very difficult for anybody to claim 5 crore rupees limit. Very difficult.
Right. So the next question is from Hemal Shah. can you also give bifurcation of income considered as speculative and under normal business?
Why not?
Right.
In your profit loss account, you can definitely, to give a better presentation, you can give it. Yes, you can. No doubt.
Right. Sir, just to add on this, so a professional can earn his income and claim under 44 ADA, and his can show his FNO income separately, right?
He can show his benefit, no doubt.
I think the last question is what income will be considered as speculative and not normal, not bifurcation in P&L. Just guide what is speculation and what is
Derivative business is not a speculation. Derivative business is not a speculation. The speculation is share business. Suppose I purchase in the morning and sell in the evening. That is
Intraday.
speculation.
Right.
Intraday. Derivative has been defined to be not speculative. There is a specific section that derivative business is non-speculative. Okay. Speculation is only intraday.
Sir, I have a question, sir. Sir, I have a question.
Please.
Sir, can a private limited company have professional income? Can a private limited company can have professional income, sir?
No. Generally, no.
Okay. And
generally, no.
And sir, can an HUF have commission income?
Generally, no. Because I tell you why.
Okay.
The HUF can have income of doing the business. Okay, that is true. Okay. But commission income is if a HUF is carrying on the business in which commission is one of the part, then it can earn the business. Then it can earn the commission income. If he's carrying on the business of commission, say example, he's carrying on the business of commission, then it is okay because he's having the investment also. But if a man if HUF is getting income of commission of 5 lakh rupees in one check, then I think it is not proper because the commission income is earned because of personal effort. And in HUF, the personal effort are not there. Then it becomes the effort of the Karta. So it depends.
Sir, say for example, if an HUF is doing business, so that business is apart from commission. So in that case, also the effort is of Karta only, no, sir?
No. I'm saying something very different. What what the people generally do, they take the farzi commission income in the case of HUF. If HUF is carrying on a proper business and the commission is a part of the business, then it is okay. Because the business is having the investments also which are belonging to HUF. But otherwise it is not. In my opinion, it is not. It is not proper to have a commission income of HUF. Unless some investments, etc. are involved of the HUF in that commission business.
Okay, sir, and one more question, sir. Say for example, there is an SSE and say for example, so he has declared the income at the rate of 8% or 6%. Sir, so what is the probability that he will be getting scrutiny? So under section 143(3).
I don't know. I can't say at all. No. I have no idea. Okay. Now, especially in the new era of faceless assessment, no issue. No idea. Absolutely no idea.
Okay. In case of previous query, if the HUF has a proprietorship and then taking commission income?
HUF proprietorship is carrying on business, proper business is carrying on, and commission is received as a part of business, okay.
No, but only commission is received in the proprietorship.
Only commission is only one transaction has been received or during
4 quarters. 4 quarters, 4 transactions.
I personally feel it is not proper.
Thank you.
It may slip through, no problem, but I personally feel it should be avoided. I don't say it is per se illegal, but it should be avoided.
Okay, sir. Thank you very much, sir. Thank you.
Thank you.
Sachinji, you can carry forward. Yes.
Yeah, there are a few other questions also.
Please, no problem.
1 second.
Today, bandwidth has given really a big issue.
Right, sir. So there is one question from Santosh Riker. Is clause 22 applicable to SSE other than companies?
Clause 22. What is the clause 22, sir? ऐसे तो नहीं याद है ना clause 22. Let me check. Just a minute. Let me check what is clause 22. Clause 22 says amount of interest inadmissible under section 23 of micro, small and so it is applicable to everybody. It is applicable to everybody. Where this section of MSME Act is applicable, it is applicable.
Okay.
Right. Okay. So there is one more question from Patel sir. Whether members are allowed to do F&O and share tradings. So I believe by member, sir means CA Institute members.
Yeah, holding COP मतलब.
Yeah, right.
भैया ऐसा कौन करता है एक्चुअली में?
करते तो है सर. सब बॉम्बे में बहुत करते हैं. बॉम्बे में तो बहुत होता है ये. कॉमन है, काफी कॉमन है.
बीवी के नाम से करते हैं ना? नहीं, you can earn the derivative income. There is no restriction for derivative income till it is not doing in a business-like manner. If it is an investment type of thing, it is okay. But it is on the very thin margin. Investment share में invest करके trading करना, say 10 transactions in a day is nothing. But if you are having a full-fledged office, having 5 persons who are doing this trading, खरीदो बेचो, then it is a business. See, there is a very thin line between business and non-business.
Right.
If I am sitting in my computer in the morning at 9:30 and get 5 or 7 or 8 transactions and then I am on my own profession, no problem. But if I am doing it in a business-like manner, having an office, paying rent, having a peon, having a 2 staff, and things like that, it becomes business. Same thing can be business, same thing can be a not business. It depends on how you carry on that activity. The main important point is how you carry on that activity.
So, but
like, to the conclusion whether it is business or not.
Right. So, but F&O income is anyway considered as a business income, right? So, it will be very.
Who considers? Income tax act.
Right.
No, I am not talking income tax act. For your question, income tax act is not in the picture.
Okay.
Look, it depends in what manner I am carrying on that activity. You are asking the question from the point of view of institutes.
Okay.
Okay, now. Yeah. So there we have to see what is the method of carrying on that activity.
Right.
How much time I am putting to that activity.
Okay, got it.
Like that. Income tax act is not in the picture.
Right. So another question from Ashok Seth. Whether cooperative housing society, which are required to get their accounts compulsorily audited, are required to get their tax audit report, done, I guess.
Yes, that will be required to tax audit done. They will have to get 3CA instead of 3CB. That's all. Right. Because they are required to be audited under any other law. That's why the report will be given in 3CA and not 3CB. That's all.
Okay. Another question is from Nidhi Somani. If SSC is in profession having turnover less than 50%, okay, and also net profit less than 50%, tax audit is compulsory. So I believe it's 50 lakhs and the net profit is 50.
Yes, it is compulsory. No doubt.
It is compulsory. Okay.
Yes. If his net income is more than taxable limit.
Okay.
If his final income is less than taxable limit, then no.
Okay. Okay. The next question is from one second. It's from Parita Nandu. In case of audit of salaried person due to F&O audit, what figures in P&L? As turnover is different than sales purchase. So in F&O, I guess the turnover is already been explained. What will be the turnover?
What will turnover? Profit loss account, you will show losses and profits separately. But whether to get the account audited or not, you have to club them together and see what is the turnover. But right. Presentation in profit loss account will be different.
Right. Also, Aditya. Hello, yes, Aditya. Yes. Hemal Shah sir, I guess he has asked to unmute him, so because he has some questions.
Okay. We can take in the end or something, or
yeah, all the questions as of now has been taken. If in case
I
have missed
questions, I think you missed one.
Most of them are answers or some kind of replies, so I have not taken it.
Private company, Parita Nandu.
Yeah, there is one more. Let us come.
Chandresh Shah and Bharat Gandhi.
Okay. There is one more question from Chandresh Shah. Private limited company rendering services for filing of ETDS returns for clients. Is this professional fee or sales?
No, it is a business.
Business. No.
It is a business.
Yeah. 1 second. Arun, 43. There is one more question I believe I missed that was mentioned. There's many questions in between.
Somebody is saying 43B question
Yeah.
was there.
Yeah. I'll just try to check.
43B, I think in case of 44 AD was the question of Naresh Shah.
That has been replied. That has been replied. That has been replied. 43B is not applicable when 44 AD is there.
But I think you want to add something more. The person, Naresh Shah, wants to add something more.
Please let him.
Let me see if he's on. Ask him to unmute. I think everything is. He's not responding. And one last, Amber Kothari has asked one more question again.
Please.
Sachin?
Yeah. I am trying to locate that question. Yeah, this one now. Right now he has sent, right? Okay. Sir, if any SSE have loss in FNO and his turnover is also not more than 1 crore, in that case, audit is applicable?
No. If his net income, if net income is below taxable limit, then
Yes.
because it is a loss, the net income is below taxable limit.
Okay.
Yeah, Naresh Shah is online.
Yeah. Hello.
Yes, sir. You're audible. Yeah, audible. Yeah, go ahead.
Please.
Yeah.
Please.
Naresh Shah. So the point is. Yeah. The point is, Section 43B also starts with not anything, not with extending anything contained in the provisions of the Act. And there is a case law, some good luck kinetic versus where it is disallowed under Section 43B, even though there was the application of this particular presumptive taxation.
There you may be right. There are two non-obstantive clauses. But there are also cases that the later non-obstantive clause override the earlier non-obstantive clause. See, this kind of dispute can be very long drawn. We can discuss this dispute after reading all the case laws and then come to the conclusion. But generally, it should not applicable, in my opinion.
Now, I have also got some orders where it is disallowed. And even the appeal was also not done.
On
That is the point, sir.
Okay, let me check up and then revert back.
Yeah, definitely.
Let me check up and I will
was
revert back
disallowed.
on the email.
Sir, because this.
No, I agree.
Sir, the point was, then everyone in the shelter of this will not pay the taxes. That particular entire purpose was, right? Entire purpose is you pay your statutory dues at least before filing the return. Am I right, sir?
The purpose is definitely what you are saying is
but
there.
Then,
No doubt about it.
Then there will be no tax liability.
I was saying the very basic technical which says 28 to 43C is not applicable.
Sir, I do understand, sir. That is why I written that both the very.
No, you are right. You are right. But let me do slightly more research on this and then.
Yeah, please, sir. Please, sir. Sure. Sir,
thank you. Thank you for pointing it out.
Okay, sir. Thanks a lot.
Thank you for your pointing out also.
No, sir. It is there, sir. I have even cited the case law, and it is reported in this item. Yeah. You can just go.
Yes, I know. Understand.
Yeah. Sure, sir. Thanks.
Any more questions, Sachin?
Sir, one question only. If a professional is having audit and having FNO loss, then individual books also need to be audited separately or together. If there is a profit and
if SSC is to be audited, then naturally all books have accounts have to be. SSC has to be audited
because the proprietorship is audited because of the gross receipts exceeding 50 lakhs.
Yes.
FNO, if there is a profit or loss, then because it's a business income.
Yes, no doubt. When the SSC is being audited for one thing, it has to be audited for all. You cannot divide it. कि इसका audit होना इसका नहीं होना. It is individual SSC who has to be audited. It is not the business entity which has to be audited. It is the SSC.
Okay, thank you.
So, sir, thanks for spending your time on Sunday and sharing your.
It was my pleasure. Definitely a good pleasure and nice day.
And it was a very good communication with you to communicate, and you had accepted our invitation, and it was a very good follow-up from your side also.
Thank you, sir. Thank you a lot. Thanks a lot.
So I request our past conveyor, CA Aditya Maheshwari, to give the sir an hearty vote of thanks.
It's a pleasure to give a vote of thanks to CA Ashok Seth, who's a very senior professional in the senior in the profession. He has very meticulously gone through the provisions of applicability of audit. What are the conditions? What is the 44 AD, ADA, 5 years, and this, and then he has got various issues. What we face in our day-to-day clauses, what we are in the compliance in the tax audit, and also answered very diligently, answered all the queries of the participants also. And there were more than 100 participants during the session also. So it's a very nice, very good session, and a very interactive session, we can say, at the end. And he finished it in the time limit allotted way before, so giving us time to ask questions to him also. So I thank on behalf of Andheri Oshiwara Study Circle.
And sir, one more thing, sir. Sir, please. Considering your age, you are our fatherly figure, and and the passion with which you have delivered your deliberation, sir. It was, sir. It has really motivated all of us today, sir. Thank you very much for coming, sir. Thank you.
Great.
Yeah, great energy.
Aditya.
Great energy throughout. Yeah.
Sorry to interrupt. Aditya, one thing, like Hemal Shah sir has just pinged. He has one question, so if he can take.
Please, no problem, no issue. Please.
Can you unmute him?
Carry on the business.
Zero हो जाएगा, outstanding रहेंगी, debtors बने रहेंगे, so that much capital will be there involved. Nothing possible है, it zero हो जाए. If some reasonable level of business is being carried on, the capital would be there. Maybe 1,000, 10,000, 15,000. That is something different, but it will be there. Okay. Debtors will be there. Some bank balances will be there.
Yes, absolutely. There are bank balances. There are everything.
Okay, so that much is the capital, right?
Okay,
no,
right.
Capital. That is the investment of HUF.
Okay. Okay, sir. Okay.